Most people will never build real wealth from investing. Not because the market is unfair, not because they started too late, not because they did not have enough capital, because they never had a framework. Welcome to the ProfitByFriday.com podcast, where we replace guessing with process, emotion with discipline, and noise with one clear idea every single week. Now, let us get into it. Let me ask you something. You subscribed to a stock investing newsletter, or you were thinking about it, and the pitch you heard was something like this. We find the best stocks, we do the research, you get the picks. That sounds reasonable. Someone smarter than you, spending more time than you, handing you a list every week. You act on it, you make money. Except that is not what happens. You get the picks, you read the analysis, you understand the reasoning, and then, Wednesday morning, the market drops 2%, and some headline says recession risk is rising, and you panic. You sell, not because the stock changed, not because the thesis broke, because the noise got to you before the system could hold you. And here is the uncomfortable part. That was not a newsletter failure. That was a behavior failure. And no stock pick on earth can fix a behavior problem. So today I want to talk about what a stock investing newsletter is actually for, because most people get this completely wrong, and it costs them real money. Let me tell you about Marcus. Marcus is 38 years old, software engineer, lives in Chicago, 6 years of investing experience, smart, analytical, the kind of person who reads the earnings report before most people even know it dropped. He subscribed to 3 different newsletters over 4 years. All 3 had solid frameworks. All 3 had real research behind them. And after 4 years of following 3 newsletters, his portfolio had barely moved. So he sat down one evening and went through every single trade he had made. Not to feel bad about it, just to understand what actually happened. The pattern was uncomfortable. He had not lost to bad companies. He had sold good companies too early because a headline scared him. He had held bad companies too long because he could not admit he was wrong. He had overridden his stops because the position felt too close to turning around. He had added to losing positions because he was convinced the thesis was still intact. Every single mistake was a behavior mistake, not an information mistake. The newsletters gave him information, excellent information, more than he could use. What they did not give him was a system that held him accountable to a process even when his emotions were pulling him in the opposite direction. That is the gap. That is what most people do not understand when they think about what a newsletter is for. Here is the real value of a well-designed investing newsletter. It is not the picks. It is the infrastructure. Think about it this way. A personal trainer does not have stronger muscles than you. What they have is a system that shows up at 6 in the morning whether you feel like it or not. A commitment structure that exists outside your own willpower. A set of rules decided in advance so that when you are tired and unmotivated, you do not have to make a decision. You just follow the plan. A well-designed newsletter does the same thing for your investing behavior. When the research is done for you, you stop spending 20 hours a week screening thousands of stocks. Your cognitive load drops immediately. You are no longer making decisions under information overload. When the entry price, the stop loss, and the target are all defined before the trade opens, you stop making emotional decisions mid-trade. The hard choices have already been made. When the market drops and your instincts say sell, you look at the stop level. If the stop has not been hit, you do nothing. The system holds you. And when market conditions are unfavorable, a well-designed system tells you to sit in cash and wait. Not to find a new pick, not to adjust the thesis, just wait. That discipline, the discipline of doing nothing when the environment does not support entry, is something most self-directed investors never develop, because there is no structure forcing it. There is a concept in trading called the asymmetry of winners and losers. Most retail investors are obsessed with win rate. How many of my trades made money? But professional traders understand that win rate is almost irrelevant. What matters is the size of your winners relative to the size of your losers. You can be right 30% of the time and still grow your account. If your winners are consistently twice the size of your losers, the math works in your favor regardless of how often you are wrong. But achieving that asymmetry requires a very specific behavior. You have to let your winners run and cut your losers short, which sounds obvious and is almost impossible in practice without a system that forces it. Because when you are sitting on a trade that is up 15%, every instinct you have says take the profit now, lock it in, do not let it come back. And when you are sitting on a trade that is down 8%, every instinct says hold on, it will come back. The thesis is still intact. Both of those instincts are wrong. Both of them destroy the asymmetry you need. And a well-designed newsletter with locked exit rules is one of the few tools that can override those instincts with a rule that does not care how you feel that day. So what should you actually look for in a stock investing newsletter? Not the win rate they advertise, not the name of the analyst, not how many subscribers they have. Look for 4 things. First, does it define the entry before the trade opens? Not as a suggestion, as a specific price level that triggers the position. If the newsletter says, this stock looks interesting in the $40 to $45 range, that is not a rule. That is is an opinion. A rule says the entry triggers when the stock closes above a specific level. That specificity is the difference between a system and a suggestion. Second, does it define the stop loss before the trade opens? A stop loss set before entry is a risk management tool. A stop loss decided after entry when the trade is moving against you is an emotional reaction dressed up as a plan. If the newsletter does not give you a specific stop level with every trade, the system has no downside protection. Third, does it publish the full track record? Wins and losses both. Nothing removed. If you can only find the winning trades on a newsletter's performance page, that is not transparency. That is marketing. The newsletters worth trusting show you the stopped out trades alongside the winners. Fourth, does it tell you when not to trade? The best investing systems have a condition under which they sit in cash entirely. When market conditions are unfavorable, no new positions open. That rule protects your capital during the periods when the environment is working against you. Here is what shifts when you get this right. You stop asking, was I right about this stock? You start asking, did I execute the plan? Those are completely different questions, and they produce completely different investors. The first question keeps you reactive. Every trade is a verdict on your intelligence. A win means you are smart. A loss means you made a mistake. And that framing makes it almost impossible to cut a loss cleanly, because cutting the loss means admitting you were wrong. The second question removes your ego from the equation entirely. The plan was followed, or it was not. If the stop was hit, the trade closes, not because you were wrong, because the system reached its defined exit. That is just an execution event. That shift, from outcome obsession to process execution, is the single most valuable thing a well-designed newsletter can give you, not the picks. The framework for thinking about every decision you make. Marcus figured this out eventually, not by finding a better newsletter, by understanding what a newsletter was actually supposed to do for him. He stopped evaluating newsletters by their win rate. He started evaluating them by whether they had a system that would hold his behavior in check even when he did not want to be held. That is a completely different filter, and it leads you to a completely different kind of publication. Amateurs subscribe to newsletters for the picks. Investors subscribe for the process. Visit ProfitByFriday.com today. Subscribe free to the Friday Flash, where you will receive one stock fully evaluated through the clear framework every Friday, so that you know everything about the company before you decide to invest. No noise, no hype, just the analysis that matters. We trade for cash flow. We invest boring to build legacy. See you in the next episode. Bye for now.